Hi, in this video I will cover Near Protocol and why do I think that it will fall 60% from the current price to $1.56. As well, I will show you a possibility of a trade setup in the future. I know that was cringy, but I had to do it. But let's be serious, we're here to make money. There is a possibility of a trade and I will show you what I need to see first to enter the trade. There are 4 things for this kind of trade that I want to see before I enter in it. Because those 4 things give me the best risk to reward ratio and the best probability that that trade will be successful. And you don't have to wait for that price of $1.56 to make money, because nothing goes in a straight line and there will be ups and downs in that downtrend to $1.56. And in that downtrend there are certain trades that I'm looking at and I will show you those trades, and they are in, I won't do that again, near future. And sorry if you still have that cringy thing in your mind. Let's jump to the chart and I will show you what I mean. We always cover first the bigger picture so that we know where are we coming from, so that we can know where we're going. We can see from the beginning of the chart we made an ABC to the upside, then an ABC to the downside and an ABC in this recent bull market. I see that 3 waves as an ABC, but I can see this as a triangle even to a D and an E wave. Why as a triangle? Because I will place a trend line from these previous all-time highs to these recent highs, and I will connect the beginning of the chart to the bear market low of the B wave, and we can see that it becomes a triangle. One more thing that is telling me that there is a high probability of this being a triangle is the retracement where bigger wave C went to. The ideal retracement for wave C, wave D and wave E are between 618 to 786 Fibonacci retracements of the previous wave. So we will place a Fibonacci retracement from the end of wave A to the end of wave B, and we can see that the wave C ideally came in the middle of 618 to 786 Fibonacci retracement, and we will calculate the wave D retracement by placing a Fibonacci retracement from the end of wave B to the end of wave C, and we can see that 0.618 to 0.786 is located here, and that 0.786 is at $1.56, where I think that wave D will get to. After that, if we calculate wave E, this is only an example because we don't know where the D wave will actually finish, but let's say that the D wave will finish at 1.56. We will place a Fibonacci retracement from the end of wave C to the end of wave D at 1.56, and we can calculate where the wave E should end, between 0.618 to 0.786 retracement. And for that type of trade that I'm considering in the long term, I would place a buy at 1.56, place a stop loss at the wave B low, because there's a rule that in Elliott wave triangles, wave D can't go beneath the wave B. So if it goes beneath the wave B and my stop loss is activated, then something more bearish is happening. But the take profit for this kind of trade would be at 0.618, and we can see that that reward to risk ratio is 5:1. Now we will place a trend channel on the recent price action from the high, and we will zoom in more so that we can analyze the current price action and that I can show you why I'm considering a trade in the near future. And don't forget, if you like this video and you want to have these kinds of signals and my trades, please like, share and subscribe and hit the notification button, because price doesn't wait for you. You want to get notified immediately before price moves. From the top, to the lowest point, we can see an ABC, and this pump to the upside we can see as an A wave in ABC. We are expecting a B wave to the downside and a C wave to the upside, which will form the bigger wave B. And we can expect after that B wave a C wave to the downside, which will go at least to the 618 and 786 Fibonacci retracement. What do I want to see if I want to enter a trade? I want to enter in a trade to be in this C wave to the upside of the bigger wave B. How will I know if I can enter that trade? 4 things that I want to see. Number 1, I want to see price taking this low and filling this wick to the downside, so making a lower low. Number 2, I will place an RSI on the chart. I want to see when it takes that low and price makes a lower low, that the RSI is making higher lows, bullish divergence. Number 3, I want to see this lower trend line of the trend channel holding as support. It can briefly break through it and make a wick and bounce back up, that's okay, but I don't want to see it breaking down and then testing this trend line as resistance. Number 4, I want to see a 1-to-1 ratio A equals C to the downside, because this I can see as wave A, B is probably now unfolding as a sideways movement or a little bit bounce to the upside, and the C to the downside that will form this B wave. And I want to see when B wave forms that the C wave is at least equal to the wave A. That's 4 things that I want to see. The additional thing that I don't want to see, I will place a Fibonacci retracement from this low to this high of wave A, and I will place 1.38 Fibonacci retracement, and I don't want to see that 1.38 retracement broken. Why? Because that is the limit for an overshooting B wave to the downside. Wave A to the upside, overshooting wave B to the downside, and then the C to the upside. B wave can't go beneath 1.38. One more thing that is telling me that that level needs to hold is this previous low on the left side. This is significant support. I will zoom out a little bit more and you can see that in the past this area was significant support. So I think that that area will hold and that 1.38 won't break. That's one more thing why I consider entering a trade in this area. If all of those 4 things, lower price, bullish divergence, holding of trend line, 1-to-1 ratio and holding 1.38, I will enter a trade here. My trade would look like this. I would enter here, I would place a stop loss at this low on the left, and I will take profits at least 1-to-1 ratio of wave A. I will place a Fibonacci extension, length of wave A, let's say wave B finishes here and wave C is around here. When we place a long position around that area, we can see that this trade setup is making a 6-to-1 reward to risk ratio. That's a good trade setup. And that's the trade that I'm following at this moment, and those things that need to happen for me to get in. In the end, I'm considering on 2 trades at this moment. One that will probably happen in the next month, and the other when the $1.56 is hit. Both of those trades have good reward to risk ratios. You should do your own research before entering a trade, and you should follow your strategy. My strategy always considers of multiple rules. If multiple of those rules are met and most of those signals are flashing me the same signal to buy, I'm buying. You should have rules in trading so that you can know if you want to enter a trade or not. There are thousands of charts out there, thousands of opportunities every day. You can choose which chart and which trade you will take. Those trades that you want to enter and that have the most rules checked are the most probable to be successful. Choose your trades and see you in the next video. Bye bye.